Hello everyone, good morning. This morning I want to discuss stock market in general. You know, a lot of people are scared of venturing into the stock market because of the scary stories they've had from the past. Um, if there's one thing that I've learned so far in stock market, it is that you need to have patience and you need to have waiting power. You need to wait for the right time. Okay, it is not something you do by impulse. These stocks are like commodities in the market, and the general psychology in the stock market is to buy low and sell high. Okay, to buy low and sell high. That is why whenever I talk about the stock market, I always make reference to the two types of people we have in the stock market. It's either you are a trader or you are a stock investor. There are differences to these two things. The first one, being a trader, means you buy a stock and wait for it to appreciate in value, and then you sell it off and make your profit. Or you buy a stock, then you're not concerned about whether it appreciates in value or not. You are concerned about the dividend that will accrue to you from that stock. Okay, so we have dividend paying stocks. These are stocks that pay you dividend for owning them. And we have stocks that do not pay dividend. All right. So when you want to buy a stock, you need to know if it's a dividend paying stock you want to buy, or you want to buy because of the value appreciation of the stock. Now, people tend to buy stocks with lump sum of money. For example, if you have 100,000 naira, instead of using the 100,000 naira to buy stock outright, you split that 100,000 naira into 10 places. So this month you buy a stock with 10,000 naira. The next month you buy another 10,000 naira worth of the stock. So this is what we call cost averaging. You notice that when you do this, at the end of the month, when you might have used up the 100,000 naira, you will have accumulated enough stocks than if you used 100,000 naira outright to buy a stock. Okay, so you need patience and a waiting power. You need knowledge, you need information to succeed in the stock market. Okay, oftentimes there are stocks that people do not pay attention to. Like, everyone ignores the stock because they think it will not rise. So, but through information, paying attention to what the news is saying, this is very important. You need to pay attention to what the news is saying about a company. Especially, there are two things that I always pay attention to when it comes to stock investing. Number one is two businesses merging together, or another business acquiring another business, thereby expanding their operational strength. This news is positive because it's going to make investors to put their money in that business. And when investors put their money in a business, the stock, if that company is a publicly traded company, and it's listed in the stock exchange, the stock price of that company is going to rise. And now, if you identify this stock earlier, before people began to buy the stock, you are going to make a lot of profit, because as the value of that stock appreciates, you're going to get a lot of returns. All right, you're going to get a lot of returns on your investment. For example, if you invested 150,000 or 50,000 naira or any amount into a stock, and that stock returns a profit of 50%, it means if you had 100,000 naira in that stock, you're going to receive 50,000 naira as profit. for investing 100,000 naira into that. That half of the is going to return to you half of what you invested. So half of 100,000 naira is 50. So at the end of the day, you're going to have 150,000 naira. All right. So the total return that you get from a stock is the initial capital you invested into the stock plus the money, the profit that stock has returned to you. Okay. That is the total worth of your stock, of your portfolio. All right. So buying Nigerian stocks or US stocks, you need to know the industry that company plays in and what is the news emanating from that industry in recent time. Okay, because there's something that people say: past performance is not assurance that future performances will be better. So what you're looking at in terms of stock investing is the news right now, the news happening in the present. Okay, you do not you do not depend on past data to forecast future outcome of a stock. You need to listen to the news that is happening right now, the news that is emanating from the industry where that stock plays in. All right, where the company plays in. That's what you need to pay attention to. For example, Nvidia. Right now, the stock of Nvidia is appreciating every day, and a lot of people are buying that stock, and the price of that stock keeps rising and keeps rising and keeps rising every day because there's a lot of demand for the Nvidia stock. So the number of people who are demanding for the stock is far much than the number of people who are willing to sell. And because demand outweighs supply, the value of the stock keeps rising. Basic economics, economy of demand and supply, also plays out in the stock market. It is the market where you go to buy and sell in order to make profit. That is the basic idea of the stock market. It is just like any other market because the aim of the seller of a stock is to make profit, and the buyer is buying at a price that will enable them to sell sometime in the future and also make profit. All right. So you need to identify a stock that will do well so that in the near future you can sell it and make profit.